would it be wrong to just put this huge dislocation in the price of oil? I mean, we've never really seen anything like it, down to technical phenomena.
I think that would be a little too simple in a sense. You know, Francine, we've never seen anything like it, period, in terms of the contraction of the global economy. Jet fuel demand is down 73%. We have the lowest demand for oil since 1968. If you look at global aviation traffic, it's at about 5% of what it normally is, and what it would have been a couple of weeks ago. So all of this is not just a technical matter, but it really reflects in many ways the big picture. It reflects an extraordinary, unprecedented situation in terms of the global economy.
What are the macro implications for these ultra-low oil prices?
Well, I think it is a consequence of what's happening in the global economy, rather than a cause of what is going to happen. And so the big question really is, you know, how long is this going to last? To what extent can we really be hopeful that some restarting of the economy? You mentioned one of the European countries, and many of them are now in this process of restarting. To what extent is that going to happen? And to what extent will the bridging policies that have been implemented throughout the world work in safeguarding some of the underlying production capacity, so that when things begin to reopen carefully and cautiously, we can go back to higher demand for oil? I think that's the real question here. So what I see in oil markets today is a consequence of what's going on in the global economy, as opposed to a cause of things that will happen. So I think we have to kind of reverse the logic here and begin with the global economy.
So, but are you saying that actually the oil market could be telling us something about the state of the economy that the rest isn't? How, you know, does it give us a glimpse of how bad this could be?
I think if you look at some of these numbers that I quoted, then you can sort of see how oil prices reflect this unprecedented contraction short term that we're seeing in the global economy. There are some technical dimensions that have led to this, you know, very extreme price movement in 1 month of the contracts. But I think overall, again, what we see in oil prices is a reflection of what's going on underneath it more broadly in the global economy. This is a unprecedented contraction of activity, and it's not the normal business cycle logic doesn't apply here. This is not something that's just happening. It is of course instigated by governments. It is a deliberate policy to halt a significant part of the global economy in order to slow down the spread of the disease. I think that's what we're seeing, and we're going to start to see more and more of these consequences in data points, in contraction of activity, and in this case, in the oil price.
Are you actually worried about financial stability in the U.S. if the shale industry really gets into trouble?
Look, I think the number one concern I have, and I think the number one priority that certainly all policymakers should have, probably all financial market participants, is that we have to prevent this extraordinary contraction that, again, was done by design to spill over into a financial crisis, into a credit crunch. So the key priority here going forward is going to be prevent this from spilling over and mutating into a financial crisis. So far, this is very different than 2008. You know, so far this is not yet a financial crisis. It is a health crisis that has caused an economic crisis. And the key now is really to prevent it from becoming a financial crisis. Because in the end, what's going to determine longer term, what's going to determine asset prices, what's going to determine the long-term damage is not really how deep this contraction is going to be in the short term. We know it's unprecedented. We know that it's deeper than anything we've seen before. These are knowns. The key question will be, can we prevent it from causing huge damage over the long term. So the big question is going to be what's going to be the cumulative loss of output over the next couple of years. And in order to prevent that from being huge, we have to prevent it from becoming a financial crisis. Oil itself, I don't think, will lead to a financial crisis here. But of course, you could see a wave of bankruptcies throughout the economy, and that could lead to significant pressure on bank balance sheets, could lead to a credit crunch, and that's the thing to avoid going forward, so that we have a different outcome than what we had in 2008.